Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So on a day like today, this is the day when you have to really evaluate what is your time frame. And you have to be honest with yourself. Are you an active trader? Are you an intermediate trend trader? Or are you a macro investor? For me, I'm an intermediate trend trader. I like to stick with stocks as long as they're trending higher. I don't see any type of reversal patterns. Or when I start to see some excitement, I sell some. I trade some, I trail some. And today we entered the day saying, you know what? Not the time to be initiating new longs in Google, a stock that just went from 600 to 712. Probably a spot to let Amazon digest. LinkedIn, same thing, went to 120 from 104, 107. Time to let it, figure itself out. And with Apple, we weren't sure. Apple, I'm like, you know what? Maybe it trades through 682.50 or so and gets to 690 or 700 in before the Wednesday meeting, or maybe they shake it up. And, come Wednesday, it'll be a great Bible opportunity because they won't be able to sell, the event considering that it's already pulled in. So early on, Apple tried to break above the resistance and it couldn't. Did a push through failure. That got me out of the majority of my size and got a lot of guys in my office actually short. I always long some of my swing accounts so I didn't get shorted. I just, said, I'm going to take off a lot of, of my position here, especially from what I entered with, and give it some space to figure itself out. Wound up closing on the lows, and now it could set up for a juicy trade if you didn't chase it up at 680 or if you maneuvered your positions today looking at the push through failure. But overall, I think just, people are a little bit spoiled. Strong stocks follow the 8 and 21-day moving average. Our indices are actually extended, not following them, like extended from them now. So every bear is growling out there like, oh my goodness, the world's going to end right here. But meanwhile, we've had one down day. If you're an active trader, yeah, you could have maneuvered it quickly. As an intermediate guy, maybe you pared down some positions. As a macro investor, yeah, you should be yawning. No big deal. Nothing's changed. Trends are intact, even though everyone's saying that this is the week of reckoning after they said last week was the week of reckoning, after they said the week before was the week of reckoning. Anyway, you take a look at the chart pattern of the SPX, you'll see, here was the last viable pattern, right? This is when we were holding 1395, pushed through with authority on Thursday. Friday had a little follow through, and today we came off. It tried to go above 1437, couldn't get any follow through, started to weaken towards the end of the day. I've been holding my spider short as a hedge versus my 6-7 longs, and at some point today, I actually became net short. Yes. Oh my goodness, Red Dog. The perma bull, which I'm far from, net short. You're allowed to be net short, for a few days to capture a cute move versus a trend. But I haven't been shorting since June 4th and shorting the whole way up and saying get the hell out of Dodge because this market's going to crush you. No, we've been riding the trend and making money maneuvering through positions. And in August, I think we had on average anywhere between 5 to 8 positions, but you're allowed to take them down as an active trader. So again, you go to the chart of the SPX, you will see that, this is where we broke out from the last time. If you remember, this was 1422. 1422 right here. So draw yourself a little line going across. 1422. There you go. This was, remember when we did a breakout failure here and we went as high as 1426. So that now you draw another line right there. So in actuality, 1422 to 1426 would be a very healthy spot to retest. Now anyone in the past that's tried to short a move into this area has pretty much been burned, but selling excitement, looking for a cute short, you could make some money. So for me, I've been having a hedge on, which turned into a net short that, I covered some near the close, but I'll cover into here and I'm looking to go long here. You could even, to be honest, get a move. Look at the 8 days right underneath it. The 8 day, I think, is a what? 8 days at 1420. So even a little bit below that. And look at this. The 21 day, which still would be a very, very strong market, stands at 14, like 10-ish. So with that said, to me, this is, support 1, okay? And really, this is support 2. This was just micro, active, you make cash flow, you have to be a professional, okay? And as far as this area, we'll see. This was day 1, that's why I wasn't, buying. Everyone's like, oh, let's buy this dip. I'm like, no, you don't buy day 1 after a huge move like we've seen recently, even as far as, this more accelerated move, if you remember that. So last little push through failure led to what was this? This was 1426 down to 1395, about 30 handles. So we'll see today's high was 1338. So if we pulled into the 1420 area, all that would really be is about 18 handles off the high. And if we pull down even further to test the 21 day, because look what happened here, we came into the 21 day. So that would be about 27 handles. But let's see what happens. We have Germany on Wednesday, Apple Wednesday, and Big Ben on what's it called, on Thursday. So if you want to look at Apple, couldn't break out above resistance, right? Here's your predefined resistance. It was having a little trouble while Google and Amazon were doing it. So it got me a little concerned that there wasn't much momentum there, because I figured either they're waiting for the event, they want waiting to see when they could actually book the revenue from pre-orders, or when could you actually buy the iPhone 5, or they just having an unveiling, whatever. So it took back the 8-day, right? There's only so many times that it's taken, it's sold through the 8-day. And so that gives you a little bit of concern. That's why you see I actually, on the end of the day, I took off my swing too. I got rid of my cash flow. Apple right around here when it couldn't break through. I probably would have shorted it for a cute trade, but you know what? I was looking to see if it would hold higher, and it didn't. So I actually lost a little extra money trying to, show that longer term you should be sticking the course. But anyway, look what happened here. You had a nice reversal, okay, and then it switched. Okay, so tomorrow we will be looking to see what goes on here in Apple. Here is your pivot low. This is the low of today. That is 662.10. Let's see what type of setup we get tomorrow. I would love some type of 80-20 setup, touching the 21 day and coming back up. That'll get me back in my swing trade versus low. So I will have saved myself some nice pulling money. I'll probably get back in my active account, which I just saved myself, just say, 18 or points or so, which why not save it if you're a professional in front of your computer? You're allowed to save yourself some money. So we'll see what happens. But you know what? If it closes, just say through the 21 day, maybe you get a bit more concerned. On a short-term basis, if I was looking at this and it wasn't Apple, I would say, you know what? This gets you out of your longs, because this potent down day just engulfed the last 4. So that's why I would say be a little bit cautious here from a short-term level. Do I think the high of the year is in? I don't. Okay, so at this point, macro investors, if you sold today, remember here, I sold on this day, and then I was able to make Q money short that day. But then I know a lot of people who didn't get back involved in this setup, and then they were kicking themselves in the the last few days. So just know that if you're going to be in it for the long term, I would maybe bring down some size. But as far as actively trading, this is a day to take a little bit of notice. There's an event on Wednesday, maybe they're shaking the tree. I pointed out on Google a pattern that I thought could have been a little similar. If you guys remember, when on Google, they were, it was holding above this prior breakout was what, 680, holding, and then it pushed through, came back above, stayed with the 8-day, and then continued. Well, Apple actually pushed below the 8-day and closed below. So that's why Apple could test the 21-day where the Google, didn't get down there. So at this particular point, even Google best in breed, okay, which we talked about today, even on Twitter, I'm like, this is not the day to be initiating a new long. Even if it goes on the monthly chart to get back to 747, you still want to have the right entries. And chasing up here just is not one of them, okay? You want to enter correctly so you could trail them and hold them. The right entry was 620. Another good entry was right around here at 645. Then the last momentum entry was really actually 2 more, right here and then right here. So now we'll see, we pull back down to the 8-day moving average, which it's been following this whole time. That'll be probably where I buy the dip with the right setup. Okay, and that's one spot. And then if they really shake the tree and market comes in, who knows, maybe it retests the 21-day at 675. So write down this level and this level and be armed. As far as the banks, everyone was saying, Red Dog, you've been riding the banks for 3-4 days, short Goldman, but still long JP Morgan from Wednesday, long Bank of America from later that week. Sold them, like, do you think the move is over in the banks? And why are you short Goldman? Big moves. These had big moves. You're allowed to take off trades. Again, if you're not going to get back in Bank of America and you think it's going to $9.5, $10 at the end of the year, you don't take it off, especially if you only trade once a month. But if you're actively trading, you can take off and move and groove and do whatever you want to do here. And on Twitter sphere, we're like, don't be buying in the 4th day of an up move, even if it goes higher. And then we had a push through failure on a lot of them. It opened down, pushed through the highs. I'm going to show you how to trade this, with a plan to show you the difference, okay? Here you go with JP Morgan. JP Morgan, to give you a closer view, If you guys remember, this is when we said be a buyer. I went long a little bit on this day because I saw Goldman Sachs breaking out early in anticipation, added above 37.45, had a little follow through on Friday, and now this is a push through failure where it pushes through the prior day high of 39.53, suckers in some more longs who are chasing a move after a nice 3-4 days or even a nice few months, and then it reverses. Some guy is waiting for a short, says, okay, goes below 39.53, I'm going to short it and put my stop at the high of the day at 39.70, because there are some bears out there that say, I want to swing trade. I want to use a red dog reversal swing trade that I know my calculated risk. So shorting here with this is your risk, maybe you make some good money down to the 8-day, and there's no reason why it can't test the 8-day moving average, because we see this typically, hug this the whole way. So for me, I sold into this, so I'm going to be a buyer back down here. I didn't short it, but just to show you how Goldman, I tried to be cute because I had 6-7 longs on Thursday and Friday, so I started to short Goldman here without a reversal pattern. No reversal pattern here, right? Strong day, strong day, strong day. I held some, probably even after today's move net down in the position. So there was no reason to try and pick a top here, even though it was really extended from all the moving averages, because it didn't give you a pattern to do so. Even if you waited today and watched it open down and shorted it today, this thing never really, you couldn't make much money there. Whereas if you came in flat, JP Morgan had a much more tradable pattern where it opened up, down, traded through, made a high, came back below. That's your short entry. Here's your risk, and you made some money. And now I would be covering into this 38 something if it gets there, because that's where I'm going to be looking to buy some back. Bank of America did the same thing. Opened lower, went through the highs, or actually it opened up. I think I sold whatever I had left over into up 9-10 cents, and 1% or whatever the percentage was. But then once it traded below 880, you could have said, I'm going to be a seller of Bank of America because this was my calculated buy. This is when it broke this last flag pattern. All right, so as an intermediate term trader, I was a buyer around 810 or around 811 here, and wrote it for this day. Got paid well on Friday, and then today, if you wanted to maneuver it, once it traded back below the prior high, you get out, and now you figure it out. Perhaps you'll be able to, if you did that, be a buyer right around this. Or hopefully, I would love to see Bank of America actually protect this gap to give us something to trade against, to show some power, but we shall see. Overall in all, though, nice little trade. Some guys today caught soda. Nice little tight pattern, not a leader, not anything to write home about, but this made us some nice money today. You see a nice tight pattern here. It started to break above what was this? This was 39.09, so I think we started buying first there. And then on an intraday, guys, how do you make money intraday? Right here, just if you look at the pattern, right, 38.50 was a level, okay? And then right around this area, okay, I was looking at it, didn't pull in when the futures pulled in, was holding, still had some shares left, and right through this 39.73, okay, I added, and then I went above 40. I took off what I added right around here for a nice day trade cash flow move. Yes, we're allowed to day trade. I know it's against the law, but we did it anyway. And that's not against the law, but people poo-poo it. So I bought some right around, I think this 39, okay, sold a little bit into here. Then I held shares all day long, added right there, sold some into there, and now I'm still long what I had, left over from here. That's how you use a tier system to stay with the move. And I felt pretty nice booking this up here. Okay, and when I did the tweet, I said I added at 39.71, trade them and trail them above 40. So I traded them and I trailed it. Pulled in a little bit more than I wanted, but I had a nice amount booked here and booked there, so it didn't matter. MCP tried to go, and I wound up, selling at the end of the day. It didn't hold well. Sperling still has his because he's a different style trader, but did add when it broke above the high of $12 or $12.20 or so, and then reached resistance and closed near the lows of the day. So for me, as a laggard trade, I said, you know what, book some money, move on. See what happens, the next time. If it would have closed above 12.50 or closed above this area, what was this? This was 13 or 13.49. I would have stayed with it because it was acting well. Stocks that close near the lows of the day, especially a laggard trade, that gives you a topping tail. You get rid of and figure it out, especially if you think we can come in a few days. So that's how you maneuver trades. Was long overnight, because it looked good, nice setup. If you look here, this looks like a nice setup, right? Really nice setup, lower level, closed near the highs. You could have been a buyer above 1254, and then it went through 1254, and then went as high as 1378, and then resistance rejected it. And we talk about when you play for momentum and momentum doesn't stay with it, you don't stay with your momentum shares. So if you want to go back to a feeler, you go back to a feeler if you're a big-time MCP fan. I'm not an MCP fan, I'm a trading fan, and this is something that I just got rid of, and Sperling's staying with it. I am an Apple fan, so that's why I stayed with it in my swing trade probably longer than I should have, because again, if this was just any old stock, and you saw this type of break here, I probably would have been out of it at 670-ish versus 665, which is where I finally said, you know what, I'm going to get out and I'll wait till tomorrow. So you would have saved yourself a little bit of money. So this little break here, if this was any other stock, I probably would have been short. I wouldn't have had it in my swing account. I would have made some cute cash flow. Instead it was Apple, so I stuck around a little bit longer. Anyway, Apple's made us a lot of money during the course of this move ever since it started to fill the gap from that earnings miss. So we'll see. We still have some time left. I'd love to see it down open. Maybe we get a negative to positive move for cash flow, or if they open it up and they bring it below today's low tomorrow, we get some kind of 80-20 trade like we saw here, and we'll just keep going with it until we get more clarity. So all in all, can't still chase excitement in an up tape, even though we're at 4-year highs on the S&P, or were at 4-year highs and 12-year highs on the Nas. You don't just start initiating positions and get excited. You still have to tactically go about it. Gold, you saw it leave the virtual trade floor on Friday. People were like, oh my goodness, you're a gold expert again. Just like back in 2008, you said at 850 it was going to go to 1500. I'm not a gold expert, but it just had a big move. I just sold it as it was very extended, and now I'll look to buy it back. I'm not a silver expert, but you look at silver, here's a nice day to enter as it breaks above a massive or a nice resistance line. Here's another day as it flags higher and goes, and it made sense to close. You didn't even have to, I sold gold on Friday. Today with silver, you didn't even have to anticipate it. You could have waited for this small reversal here. Went above the prior high and couldn't go anywhere. So now to me, I'll be looking at silver to see if I could rebuy this 8-day moving average. On gold, GLD, it opened down, it probably fills this gap at some point, and the same way, back here, whereas, you had your nice move and then it pulled in. Here's another nice move. Someone's been drawing on my charts here midday, and I think that, people like, should we buy it back here? Why would you buy it back after one down day? After a move like we've seen from the real buyable 157, 158. I would say right around here is where we look. If gold is any good, this is the area that it'll hold, just like it held here and went higher for continuation. This is where we try and buy it back. If you're a gold macro bull, you know what, you're probably staying the course and you don't care what, about today, because you think that it's going to at some point take out these highs here. If you're a gold macro thesis and you say there's 16 trillion reasons why gold is going to make new highs, then you're staying the course. If you're an intermediate term trend trader like me, you try and look for a nice pattern, you buy it, nice pullback, and then into excitement above the 8-day and the 21-day, you sell it and then figure out if you could buy it back. So that's about it. Monday, we'll see what happens tomorrow. There's still a lot of action, a lot to like. You can make money short, you can make money long. Just again, time to evaluate your time frame. See you in the morning.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.